Time now for the bond report. We're focusing in on the convertible bond market with Simon Koch, joint CEO of Sovereignty Capital. Simon, good to have you with us this morning. It seems like the convertible bond market has really shot into focus once again, with Shoprite issuing its convertible bonds with the nominal value of 4.5 billion rand. That was at the end of March. Crystal Viso taking up 1.7 billion rand of those convertible bonds being excluded from the rights issue. But very interesting, strong demand coming through for the first time from South African institutional investors.
That was the most significant part of it. Historically, the South African convertible bonds, the South African institutions weren't able to sort of categorize convertible bonds. So your equity fund managers who had equity mandates or the debt mandates didn't know where to fit with convertible bonds. And historically, most of the convertible bonds from the big companies have all been taken up offshore. And this time in this issue, other than Christo, who's a very smart investor.
and he certainly has a lot of, a big stake in Shoprite right now.
And 1.2 billion of the amount of 4.5 was taken up locally by various institutions, which is the first time of where any significant quantity has been taken up locally.
So what does that signal to you about the type of the trends we're seeing in the asset allocation strategy of big institutional managers?
I think there's a change, because historically the allocations where you had your what you call your alternative investments, where there was a small, which is private equity hedge funds, and then you had your main listed bond and listed equity mandates. And I think that, especially in the bond mandates now, people are with interest rates low and in the foreseeable future, most parties in South Africa think they're the lowest they've ever been, so they're more likely to see interest rates rise. Your bond managers are looking for extra yield. And a convertible does give you that.
So basically, just for the layman tuning into the show, a convertible bond is basically an option to turn that paper, that debt, into equity at some point in time, depending on the share price.
Yes, it gives you the option to do it, but it also sets the pricing at today.
Yeah.
So you look at the market today, and if you assume that the market's going to grow, obviously that option becomes more valuable, the equity side of the option. But in the meantime, you're getting a yield like a bond, and you have the security like a bond. And if the market goes flat, well, you get a bond. You get a bond-like return. And if you say you don't know where the market's going to go in the next 3 years, but if interest rates go up, you're going to lose on your normal bonds. But if you've got a variable, convertible, or fixed, it depends on the interest rate. But generally speaking, you've got 3 years to say, I can take a bet on the market, but at the worst comes to worst, if I've
still got the bond,
I've still got my, and hopefully they redeem me at par, which is getting my money back.
In terms of performance of the convertible bonds that we've seen, firstly South African ones, how have they performed relative to other asset classes?
You can't. There are no South African convertible bonds. Well, there are South African companies that have issued convertible bonds.
There's no index to track.
There's no index, there's no information, and all the convertible bonds historically, other than Shoprite, have been taken up by international investors. Internationally, yes, there is performance, but also it's limited, because it's not a highly traded instrument, because if you're buying a convertible, you want to hold it. You're not there to trade it. There are convertible funds, but they have done exceptionally well internationally.
Pretty much also tracking equity markets. If you
effectively,
look at the graph of convertible bonds globally and the performance over the past while now, say take it back around 10 years, they've pretty much tracked the equity market. So that risk factor also needs to be
But if you notice, when the equity markets drop, they stay just above the bond yield, the bond market. So if you look at it, your bottom end was the bond yield, and your top end is the equity yield.
Yeah.
So if you are a bond trader, you're saying, well, look, my downside is getting my bond return, but my upside is getting an equity return. And if the equity returns aren't there, I still get my bond return. But it's better than not having it.
So are we going to see more South African companies coming to the market with convertible bonds? Is this likely? Is this a preferred way to raise capital?
You know, whether they go to the market or whether they do it in what I call unlisted space, I think there's going to be more opportunity in the unlisted space, purely because one of the problems with a convertible bond for a South African listed company, and you list it, and Shoprite saw that as well, but maybe that also was a function of the rights issue, was immediate decline in the share price, which is not what you want. But what happens is, generally the players who have bought the bonds are your hedge funds. They buy the convertible, and they go short on the ordinary shares because they're getting a yield on their money. So it's a no, you know, it's a straight return. So yes, I do see it coming, but probably more unlisted. And unless the big, what it has said is for the big 40 companies, there is a market in South Africa now which there never has been. Institutional market,
as you say. Is there any opportunity for retail investors, though, to get exposure to convertible bonds?
Look, we at the moment, no. We're trying to set up a convertible bond fund. That's what we're raising capital for, which hopefully via the institutions, your retail market is, because your pension funds are the beneficiaries of those. Whether you would get the Old Mutuals, the Sanlams, the Liberties, etc., retailing sort of packaging of bonds, I don't know. But if some more of the top companies, and it becomes more the norm, and they list the bonds, then there is going to be an opportunity. But I think maybe 2 to 3 years out, you might find a few that can get in the hands of the retail investors.
But certainly hedge fund managers playing in this space, big
internationally, very much so. Internationally, they're the biggest takers of convertible bonds.
Thank you very much for that update. Very interesting. Simon Koch joined CEO of Sovereignty Capital.